Hello, hello. No, it's slightly better, but you still sound like you're miles away. Don't worry. You can put stuff in the chat if you want to ask any questions. So we'll kick off. Hopefully more will join. Probably finding people are dashing from meetings and coming to lunchtime sessions. So we're giving it 6 minutes. Let's kick off. We are recording this. If anyone's got any problems, I guess leave, but don't leave your camera off. If you want to ask any questions, raise your hand or put it in the chat. We'll try and facilitate that. It's informal, so if you feel like you just need to jump in when it becomes appropriate, do that as well. That's it. This is sponsored by Resourcefully, trying to help contractors in the IT market. And I think working with Parka, this completes our suite of things I think IT contractors should need for their life. I've personally worked with Parker and looking to solve my insurance and my health cover. I had kept Southern Cross as an example from being permanent employed, found it was quite expensive, wasn't getting the benefits out of it. So I've talked to these guys who are really helping me get through and understanding what is right for me. And it's saving money as well, which is fantastic. So yeah, I shall hand over to Parker, Lance, and Tina. And as I say, we're recording it and we'll put this out on our YouTube channel and et cetera, et cetera. Over to you guys.
Thank you, Pete. And thanks for the opportunity to chat with your Resourcefully network. It's a great chance for us to share our knowledge of the industry and insurance and how I believe it'll fit really well into what your people are needing. As an FYI, Pete's got his muscles out and negotiated a pretty sharp deal for all the Resourcefully members. So as we work through this, if there's something there that resonates with anyone, I'm sure Pete will have our contact details loud and proud. And so feel free to get in touch. I'm Lance. This is Tina.
Hi, everyone.
And we're going to take you through some insurance chat. Now, over the years, we've worked with many consultants and contractors in the IT world. And one thing that I've found to be true is that the risks that you carry are higher than most, and the benefits you receive are lower than most of your employed and full-time employment brothers and sisters. And so, with that in mind, it's a really good way to just have a bit of a think about how your insurance plans can best fit you. And what I mean by what type of insurance, it's insurance on the person. So Parker Insurance is focused on what happens if you, the person, is sick or unwell or sick or physically hurt or worse. So it's things like life insurance, health insurance, income protection, those sort of things. So there's two parts to insurance. One is on the thing and one is on the person. So we focus on the person. Now, Parka, we've been going for 12 years. We're proud to be involved in insurance. We try and give back to the community wherever we can. We sponsor sporting events. We do defibrillators for gyms. We sponsor charities. There's my team going through a CPR course. We're trying to do our bit to sort of be a part of our community. We're based in Wellington, but we've got clients right throughout the country that we add value to. So a little bit about us. We're also very engaged in the mental health support area. So I'm sure everyone's just as aware as you're as aware as anyone of just how significant the mental health catchment is in New Zealand at the moment. So we've proudly raised over $98,000 in recent years to go towards mental health support. And that's through events like getting Sir John Kerwin and Sir Graham Henry down to speak at local clubs and just about their journey with mental health, which has been really powerful. Quick disclaimer. So all of this is general in nature. If for any information that's more specific, reach out to your insurance advisor, reach out to your insurance provider or to ACC or the like, or come and have a chat with us direct. So this is all very general in nature. Now, when it comes to insurance, we go, what actually is insurance? So what does it actually mean? So this is what Google would say. So it's where a company or state essentially takes money to cover you and you pay a specific premium, blah, blah, blah. How I define insurance is it's actually the worst use of your money there is. There is nothing else that I can think of, and no one's ever proven me wrong on this, that you actually put your money towards something that you hope you don't get a return on investment for that money. So you're essentially putting your money into somewhere where you actually hope you're never going to see that money again. But what you do know from that is that you've got the peace of mind that if you're the person that something really unfortunate happens to, then you get the best return of investment for that money. So it's meaning that lots of people are putting, smallish amounts of money into a big pot, and then the unfortunate few are drawing lots out of that big pot. And that's essentially a very good way of sort of thinking about how insurance protects people. These are a few of the things we hear all the time when it comes to insurance, and it's a good way of breaking down what I wanted to touch on today. So when it comes to some of the questions we get asked or the comments we hear, it's things like, I have insurance, but I don't know what it does, or I thought I had cover for that, which is obviously quite scary. There's this whole non-Pharmac funded drugs thing that people have heard about, and they hear that it's important, but no one actually knows what they are or what it does or why it's important. So we're going to talk to that. A lot of people will say to me, yeah, I've got it, but I just haven't looked at it for years. Or I took out insurance when we bought our house, but I haven't sort of looked at it. So we're going to touch on why it's important to keep on top of your insurance. And then a lot of people are asking now, and I think this is a really good sign of where we're at, is how can I get more out of my cover? So I think as a nation, we're getting more, our financial acumen's growing, and they're saying, well, if I'm going to spend this money, how do I know I'm getting the most out of this money that I'm going to spend? So I'm going to touch on that too. Now, when it comes to questions, feel free to fire them at us because we want to make this as interactive as possible. We'll do our best to answer them, and I'm confident we will be able to answer most questions. And if we can't, we'll come back to you on it. And if you do get a question that stumps us, then we'll send a chocolate fish your way as well, as a bit of a sign of someone's thinking about good questions. Now, the top two of these parts are focused on claims. So I want to touch on claims first and how claims relate directly to you as contractors. Now, I've got some bad news and I've got some good news. Now, the bad news is that you're all going to die. The good news is it's probably not going to be today or tomorrow, and it probably won't be for a little while after that. In fact, you're far more likely to have something occur that isn't going to result in a near passing away than you are to actually pass away. And what I mean by that is as of us sitting here today, we're far more likely to be diagnosed with something awful that causes a bit of a long journey of a health recovery and what have you, than you are of actually passing away from that thing nowadays. And that's through medical advancements are so much better. It's through screening and scannings. We're finding out that things are about to go wrong a lot earlier than we would otherwise be. So this graph here breaks down what is your likelihood of certain events happening to you before the age of 65. So I'm not going to spend too much time. I'm going to pull out a couple of stats on here. So if we look at on the first column is as a male, then you've got a 9% chance of passing away before the age of 65. More importantly, though, you've got a 17% chance of actually being diagnosed with something awful before the age of 65. And by something awful, we're typically referring to cancer, something cardiovascular, or a stroke. They're sort of the three big ones, with cancer being the worst. For a female, there's only a 6% chance of passing away by the age of 65. But notably, there's a 19% chance of something happening that makes this person temporarily disabled. And what we mean by that is not being able to work for an extended period of time. And that's sort of what we call temporarily disabled. So these are two quite telling stats that help us understand what's important for the risk factors for our people, so that when we're talking about what type of insurance we want to do, we're focusing on the areas that are their highest risks. Then if we drill down into that a bit further and look at contractors doing the type of work that you're doing, where are you most likely to have something unfortunate happen? Now, I can tell you that physical injury as a cause of something that stops you from working, you actually under index in these areas. And that's pretty obvious, because if you think about an IT contractor versus a typical builder, both of you have a broken arm. The builder's going to probably be off work a lot longer from a capability aspect than the IT contractor. The only outlier one of the key outliers to that is anything to do with the head. And so we do see a lot of concussion injuries impact the ability for the contractors to continue work. However, mental health is a key consideration. So you'll over-index in mental health stats. And so anyone that's working high pressure environments, contracting type role, there's a lot of things to think about at any one time, as you well know. And so the mental health can actually take a bit of load for that. So that's things like overstressed, depression, anxiety, these sort of illnesses. And then cancer and cardiovascular are also areas that you over-index. And these are certain cancers and certain cardiovascular situations based on stress, overwork, these sort of things. So it's important to note that whatever you're thinking about when it comes to your cover, we're focusing on those areas being paramount in terms of where you're likely to need the support. A lot of what we hear is that I've got ACC, so I'll be fine. And ACC is quite a remarkable offer for all Kiwis, not just for those working, but for those that are working. We pay ACC levies through the form of tax. Now, this is for those on a PAYE wage. It's simple. It comes out before we even see it. For those on shareholders' salary or drawings or however it might be, then as you well know, you pay your ACC levies yearly based on what your earnings were. ACC is great because it avoids private litigation. We've all heard horror stories in places like the States where they're suing left, right, and centre because someone hit them with their car or because someone spilled a hot coffee on them or whatever it might be. ACC actually helps mitigate those sort of private litigation situations. When it comes to ACC cover, because it covers everyone, it doesn't cover anyone perfectly. So there's something to consider there. And the stats don't lie. And what I mean by that is, if I look at any people in New Zealand that are off work for an extended period of time, 1/3 are off because of an accident and 2/3 are off because of an illness. So ACC is amazing for those that are off because of an accident, but that's only 1/3 of the story. The other part of the story is things like it's called the medical health benefits and those sort of things, which are a pittance to what's actually needed to support people. Now, the good thing with ACC for you guys is you've got the option to structure your ACC as you choose. So this is about anyone who is self-employed and paying themselves through a shareholder's salary or through drawings or similar, so not PAYE, has the option to say to ACC, I want to be covered for X amount. Now, this is called ACC Cover Plus Extra. Now, ACC Cover Plus Extra is designed to make sure that two things. One, if someone's new to being self-employed, that their cover actually fits what their needs are going to be. And secondly, so you can better understand what type of cover you had, make it easier at claim time, and know exactly what your levies will be each year. What I've built here, it's hard to see, but this is a templated quote of the cost of ACC that you can find on the ACC website under their calculators. What it does is I've put in here IT consultant. You'll see the CU code just below that. That's the relevant code that most of you should be on. So you want to check that. And then down the bottom here, this is what your typical ACC cost would be per year, assuming that you're earning 140,000 or over. So that's the 140 is sort of the maximum amount of cover or earnings that ACC will recognise when it comes to making claims. So that 2,300 is a typical yearly levy that you would pay. Then you have the option of dropping your cover from 80% of 140,000 to a minimum of 100% of 34,000 $700 or thereabouts. And that would end up costing you $736.82 per year. So these two figures are essentially the minimum and maximum that your levies can be, and thus the minimum and maximum cover you could have with ACC. Now, that's fine. You can be anywhere within that. But obviously, if you are dropping your cover to the minimum and then something happens, i.e., you have an accident and you can't work, well, then you're only going to get 40,000, or sorry, 34 and change thousand divided by 12 per year, and that's still taxable, although seek tax advice on that. But it is highly likely you'd have to pay tax on it. So that's not going to be anywhere near what you would probably need to reflect your earnings in terms of your costs and day-to-day living expenses and those sort of things. What you can do with this, though, is if you have a chat with a good insurance advisor, you can use the offset of this cost, the best part of $1,500–1,600 per annum, to go towards this income protection piece. That means that for whatever health reason you're off work, you now have very, very resilient and comprehensive cover. So it's a far more robust way of using your spend, so what was originally going to ACC, to actually better protect you should something happen. Too many people use it as a cost-saving mechanism, which I wouldn't advise. I'd use it as let's just make sure your spend is going to the right areas. Okay, so all of the stuff's publicly available on ACC website. I recommend checking it out. It's very good. Or get in touch with us and we can start building through and going a bit deeper into how this has positive effects for you, especially if you are in a situation with you and your partner are part of the business together and your income splitting. There's even more benefits that we can go into, but I'll go into that another time. I've covered off these parts. I want to touch on this non-pharmac and non-funded drug piece. So in New Zealand, we've got MedSafe. MedSafe is the government agency that decides what pharmaceuticals are okay to be used and administered in New Zealand. So they're safe to be used. They make sure that Panadol is safe, and they make sure that all these bits and pieces. So any drugs administered in New Zealand have been approved by MedSafe. Then we've got Pharmac, and Pharmac fund all the drugs that are publicly available. So you take your kid to see the doctor and you get prescribed Pamol, and the Pamol's no cost to you. That's because Pharmac are paying for it. Okay. Now, there are a significant portion of drugs that are safe, i.e. MedSafe has approved them, but they're too expensive for Pharmac to fund them. So these are called the non-Pharmac or non-funded drugs. And the disappointing thing is, thanks to the great world of farmers, big business, big pharma, is that these drugs are the big flashy ones that make an incredible difference to those on a cancer journey or on a similar type journey. Now, why this is important when it comes to the world of insurance is because there are a lot of different areas that have significant high quality drugs available that you would, if someone's on a journey in these areas, you'd have to pay for if you didn't have insurance for these. Now, this is just a bit of a table that's available on the NIB website. I've highlighted some of the key ones, including things like lymphoma, leukemia, skin cancer, breast cancer, obviously, lung cancer. You're talking very easily getting up to almost 100,000, in some cases, multiple hundreds of thousands of dollars per annum for these drugs. And the scary thing is that people are having to make the decision on these drugs are going to have a very good positive effect on my chances. Do I remortgage the house and have access to these drugs, or do I leave the house debt-free, say, so that if I was to pass away, I'm not leaving my family in debt? And it's just an awful situation that good Kiwis are having to make that decision. And so being aware of that these drugs and how much they cost and that you can have insurance for them is the first step in just making sure that you don't have to make that decision. Everyone will know of chemotherapy, and chemotherapy has been around since the 80s. It is sort of the stock standard cancer treatment, probably next to radiation therapy in terms of usage to fight and battle cancer for people. What's starting to happen now is this new thing called immunotherapy. So how immunotherapy works is immunotherapy, and I'm no oncologist or specialist, but in terms of how I understand it in layman's terms, is that immunotherapy will be administered and then will help your immune system understand and see the cancer. So essentially what I've heard defined as paint the cancer so that your immune system can now go and target and attack that cancer, which previously it wasn't able to do. Now, the key difference between chemotherapy and immunotherapy is that we all know from having loved ones go through chemotherapy or similar that if you go for chemotherapy, your world around that is just really tough with really poor side effects, feeling awful for weeks on end as you're going through the rounds of treatment. Immunotherapy, I've heard of people going out and having lunch with loved ones that afternoon after being administered the immunotherapy, because it is a far easier on the body to handle, and so you're actually feeling like you've still got life in you. And whereas chemotherapy I've heard defined as taking you as close to passing away without actually doing that to get rid of the cancer. So none of them are great, but the immunotherapy part is significantly better. Now, why this is important is because a lot of insurances will only, if they have cover for non-pharmac funded drugs, it's only for chemotherapy non-pharmac, which is actually quite a small portion of the really good non-pharmac funded drugs. The immunotherapy ones are the key ones, and there are a few providers that have that in their policy wording for non-pharmac funded drugs. So that's a very important distinction to be aware of. So something to look into. I've put the link as to where I've got this information from down there as well. Here's a couple of examples of a couple of reasonably well-known non-pharmac funded drugs. Trikafta, you're talking 500,000 per year. Keytruda, 60,000 per year. And these are actuals. This isn't estimates. This is no, hold on. I think that the Keytruda is an actual. Maybe the Trikafta is an estimate, but this is all from the Stuff website as well. This page here I want to use to highlight a couple of things that people just often aren't aware of when it comes to what type of cover do they have. Now, I can see Pete trying to read it, so I'm not going to make you read everything because it's in typical insurance, it's in fine print. So no surprises there, but I'm going to pull out a couple of key points. Now, one thing, I'm not beating up on any insurance company because Tina and I, we have what we call agencies with all of these providers. So they're all good companies in their own right, but the more information you have, the better your decision-making powers can be. Now, this is Southern Cross. Now, Southern Cross are the biggest, they're the easiest to claim with. They're a very, very strong provider of health insurance in New Zealand. Unfortunately, their non-pharmac funded drugs rating, so this is independent market research, is very low at 0.3 out of a possible 5. What's important with that is that we have a relationship with the local cancer clinics, and we talk to the people that run those cancer clinics, and too often good people are going to see them saying, yep, I'm fine, I've got Southern Cross cover, and then the cancer clinic has to tell them, we're sorry, but your cover does not include these non-pharmac funded drugs. So when you look at what others do include, and I don't know if I've highlighted it yet, I haven't, sorry, but across the line there, we can see just some of the other ratings are significantly higher than the Southern Cross one. Now you can add to your Southern Cross policy if that's what you've got, and there's options around that. But it's just being aware that if you've just got the standard Southern Cross, then you will potentially have a gap with your non-pharmac funded cover. So it's definitely worth looking at that. If you don't know, we can check. Get in touch. We can have a look for you. We can give you that information. And as I say, information's power when it comes to not being surprised when you want to claim on your insurances. Okay. But after all that sad news, here's some good news. So what's new? Now, as I was saying before, Kiwis are far more, our financial literacy is increasing all the time. And so when I started this business with my wife, we would often people would say, oh, look, what are my friends doing? Or what's such and such doing? Or what are people in my position doing? And people just wanted to work with the masses. Now we're getting people saying, actually, I know what I want. I want this because they've done the research. They've heard people talking about it. They've seen friends and loved ones go through journeys. So they know what they want, which is great. On top of that, there's a whole lot of these fantastic new additions that insurance companies are now starting to add into their policies for no extra cost, but for significant benefits. So one provider has this, what we call, it's called connected care. It's an additional, it's built into everyone's cover that has cover with this provider, but not many people know they've got it. And what it is the first one is medical. So you get to expert medical opinion and ask a GP. So you can jump online and just get a second opinion, or you can book a GP consult online if you can't get in to see your GP, which is just incredible considering how busy all the GPs are. There's this well-being piece where you can get a nutrition consult, fitness and recovery consult, which again, fantastic if people wanted to improve their health. And then thirdly is this mental health piece here. Now, one thing that I know to be true is anyone that's on a mental health journey has really struggled, well, a lot that are on a mental health journey have really struggled to find good people to talk to get support for them. Now, the ability here to just have another avenue to access support is remarkable, and it's such a fantastic benefit. So these sorts of things are available at no extra cost for a lot of people. So it's worth going, gosh, do I have this? Should I look into it? Get in touch with your advisor. If you don't have one, would love to help and just see, is this an option for you? Another one is a lot of awareness around what are actually causing some of the big illnesses that Kiwis are facing and how can we do something about it. So this table here talks to 4 main risk areas. So lack of physical activity, eating poorly, drinking too much, smoking, that have an effect on what are called 4 non-communicable diseases. Zero, non-communicable, something like that. Disease that if you got better here, you have less chance over here, is essentially what this is saying. Now, these 4 diseases have responsible for 63% of the deaths today, and by 2030 are likely responsible for 80% of deaths. Okay, so we're less active, we're eating too poorly, and everyone knows this, but that rate of death, of the effect that it's having, is going up. Now, one insurance provider is saying they are giving all of their members the tools to learn more about their health, to take steps to improve their health, and then to enjoy the rewards for doing so. And so it's a very effective way of members of those of that company, which Tina and I both are. And so we know a lot more about our health than we did before we started this journey. Tina's health was already perfect. I've taken steps to improve mine, and we're getting rewards for doing that. And these are some of the rewards that this company is doing. So there's a lot there, but just to pull out some highlights, there's things like air points, you get discounts on mole maps, you get discounts on movie tickets, Countdown, Harvey Norman's, and you even get this Apple Watch benefit. You notice a lot of insurance advisors wearing Apple Watches now. That's because we're taking advantage of this Apple Watch benefit. And what it does is it gives you weekly movement goals. You hit those movement goals, then it helps fund the Apple Watch that you're wearing. If you don't hit them, then you've got to pay like $5 towards the Apple Watch. So it's quite a cool little carrot and stick situation. That's me. I think everyone's had enough of me talking. I know Tina has. She needs to lie down after this. So, any questions from the throes of people that have joined us?
No, all silence. I think for me, I had the ACC thing down as I'll ask that question. You answered that. That was awesome. That seems like a no-brainer to me. Reduce
Absolutely.
your cost to ACC, put it to something that's a lot better use and has a lot better cover. So that was a big tick. The MedSafe and the non-funding, I think I'm seeing that personally in my world, and you guys are helping me with that, which is great. I think this is awesome. I think everybody needs to be aware and know more, choose wisely, get the cover that's right for them, and gives them that safety net, if you like. And as I said at the start, I was with Southern Cross. I still am to some degree, but I'm just re-looking at all that because I think there's better ways of having cover. And as that chart showed with all the percentages, there's definitely better out there for certain elements that you need to be aware of and do the right thing. So that was fantastic. I don't know if anyone else has got any other questions, but I think everyone's is a personal journey, isn't it? It's all really personal to you. So we need to come to you guys and say, this is our situation. This is what I'm comfortable with in terms of risk. Help me do the right thing and be financially savvy about it.
Yeah. And that's it. And just how I always like to say to my clients is the more you know, the less surprises there'll be when you go to claim. And so if you have a chance to sit down and just talk to the experts, and like anything in life, you don't go and pull your own teeth out, you get an expert to do that. It's like anything. The more experts you have involved in your world, the better outcomes you're gonna see. So
Hey, Lance and Pete, can you hear me now?
Yep.
Yes.
Okay. Finally, I got a nice mic and a headset. Cool. Sorry for that initial hiccups. So, couple of questions, Lance. Is like this Parka is the new insurance provider, or are you a broker that you're going to get best out of the market?
Great. Yeah, good question, Balin. We are brokers. So we refer to ourselves as advisors nowadays. So the term broker means we take premiums. We don't do that. We just facilitate relationships between our clients and the insurance provider based on the best fit that we see when looking at the market.
Awesome. Great. The next question I have is, I heard that, there is the PPS Mutual, who is a kind of union concept insurance, who are popular in South Africa and Australia. They're trying to install in New Zealand. Do you hear of any of these kind of insurer available, which is having a union kind of concept for life insurance?
I haven't heard of PPS Mutual, but I'll look into them. But there are a few providers that have relationships with organisations or unions. There's a really effective one for the teachers. The success of the what's the term I'm looking for? Like the quality of the outcome for the client varies a lot because you're not dealing with someone who is intrinsically involved in your world. And so which is the whole reason advisor exists, is to make sure that the clients get the best outcomes when they're going to go claim. And I've found that over the years, people that jump onto these schemes, it looks great until they go and claim, and then they realize that the cover wasn't quite as fit for purpose for them because they didn't have such advice that was tailored to their needs. Does that answer your question?
Yeah, cool.
Yeah.
That's what you call that's a success of being a I still call as a broker, but as advisors going through you, which is more successful in New Zealand. That's great.
Yeah, absolutely.
And generally, when we go for income protection or what you call income coverage with general agent, they are being saying about broker, it is not covered. So you are proposing here there is a proper insurance that covers the income protection?
Absolutely. Yep.
Okay, it's not only the scenario where we have a medical scenario or there could be a life loss, but there is a job loss as well. There is an insurance that covers for
yes, so good question. So our income protection's only health based, so you can't work because of a health situation. If you for loss of contract, or in some instances that they call it redundancy cover, that's typically not available.
Okay, so income protection is on the medical condition based.
Yeah, that's it.
Okay, Cool. On one top of question on that, I'll go mute. After that, I'll give chance to others to ask. So many things. So the one that you showed that ACC covered, which is of 134K or 140K. So what the proposal or the coverage that you're going to give is that will cover whatever may be the maximum that we can have in the earnings, right?
Yeah,
On the
yeah.
income
So
protection.
yeah, I mean, how do I answer this? So the upper limit of earnings is very high for income protection. It just comes down to what you want to pay. Now, it is it's not a straight line. It does sort of taper off a little bit in terms of how much we can cover. Well, it's called I think they call it a decreasing percentage or something similar. But for all intents and purposes, um, you know, we have clients earning quite a lot of money that have very comprehensive income protection across all of their earnings, because they want to know that should they not be able to work, their future wealth creation stays stays strong, even if they're not working. So they want to protect that as much as they can.
Cool. So you're saying the premium will be proportionately increasing
Yeah,
when the income goes
that's
up.
right.
Okay, cool.
That's right. Exactly.
And is it like it's going to supplement the ACC? What I mean is like
Yeah. Yeah,
the
good question. It'll some offset ACC. So if ACC is paying out, income protection won't. Some don't offset ACC. So if ACC is paying out, then the income protection type product will still pay out as well. But we're starting to get into sort of technical details for the specific cover a person might have, but it could be either.
Okay.
Yeah.
Cool. So I'll go mute. I'll give opportunity.
Thank you, Balan. I've got a couple of questions in the chat, Brian. So other insurance providers seem to offer better non-farming. So yeah, they do. The premiums don't vary too much, to be honest. So if we look at some of the other key providers versus Southern Cross for equivalent types of cover that do include non-farmic, you're talking, for all intents and purposes, pretty much the same. There might be a maximum 10% variance, but typically not. What Southern Cross do is their claims journey is a bit smoother. So that's one thing to be mindful of. However, the other providers are starting to really get closer to Southern Cross in terms of their ability to make claiming decisions as quickly as possible. So whilst the cover isn't more expensive and slightly better, it's probably slightly harder to claim on. Mental health. So what mental health scenarios are covered? So the key thing with mental health is that it's not a pre-existing condition. And by pre-existing condition, what can often happen is clients can go see their GP and they've just had kids and they've just picked up a new contract and all the stuff's hit at once and they're stressed. And so their GP writes the word Lance seems stressed in the notes. All of a sudden, it is a pre-existing mental health condition as far as the insurance companies are concerned. So that's a very low bar, which is a shame. However, and insurance companies are nervous of mental health because you can't x-ray it to see that it's fixed or anything like that. But most notably are things like depression or severe depression, where the client can't work because they just not mentally able to. Anxiety is another big one. But anything where it starts going from not feeling good to this is an illness and it's something that this person's on a journey on where they need to get themselves better. It's not easy to claim on, but at any one time we have a number of clients that we're working on with claims for mental health journeys. And then question, if the beneficiaries/nominees for a life insurance policy are based overseas, e.g. parents based overseas, how would the claim be handled? Is a lawyer required? So in terms of the beneficiaries nominees, what we're typically looking at there is the policy owners of the cover. So it depends. So we used to, years ago, it was referred to who is the beneficiary for this insurance. Now we don't talk about beneficiaries or nominees anymore. We talk about policy owners. So the policy, whoever the other policy owner is, will get that money. Now, if the policy owner is overseas, which would be the same result as the beneficiaries or nominees overseas, then absolutely, I would recommend that a lawyer is involved in that regard, simply because of the issues that we have around just making sure the money is getting to where the money needs to get to. And that is all things where it starts going out of our control in terms of what we have done to make sure that the insurance is there for the reasons it needs to be there, and starts getting into where is this money going to end up. So like that's something that we could talk a bit deeper about, just to make sure that if there's a situation there, we could give some guidance on that. However, that's probably the best I'd say with that one.
Just going back to the Southern Cross one, I
Yep.
think they're all businesses in their own right, trying to make a living and a profit, etc. So they're all going to target different areas that they're better or worse at cover. And that's, I think, me personally, that's why I've come to you guys, and you're helping me form what's right for me and the rest of my family. And we're tweaking our personal Southern Cross cover. So I think that's exactly why we need to come to you guys, because everyone's personal Southern Cross might be right for someone or part of the family and might not be quite the right answer for another member of the family or person. So I think that's yeah, all the covers are different, and you guys are the experts to say this would be right for you. So like all these questions, it's very personal, isn't it?
Yeah, that's it. Like it's amazing. We're 12 years old now, and we're still getting questions where we go, gosh, I've never thought about that. And even when you go to the insurance company, they're like, gosh, we're going to have to look into that. And so we'll never know everything, but we'll find out what the answer is. That's for sure.
Brilliant.
Okay.
I noticed we had a couple of people join fairly late. That's fine. We have recorded this session and we will make it available. If you're on Resourcefully platform, which is free for IT contractors and has lots of benefits in there, we'll email out the link as well, so you'll be able to see that. So that's fantastic. Unless there's any other questions last minute, a huge thank you to Lance and Tina and Parker, and yeah, keep in touch.
Thank you, Pete. Thank you, everyone.
Thank you.
Thanks all.
See you. Bye-bye.
Thanks all.
Bye.